Welcome. This is James Duerr at the James Duerr Show, 7 Steps of Financial Success. And we had a caller that called in over the break, and he was talking about he's brand new and he hasn't invested before. And where does he start? And during the break, I was talking to Shemaiah, my producer here today, and we're talking about, how do you get started? So Shemaiah, come on over, put the headphones on, and this is exactly what this program's for. I don't care if you make 20,000 a year, or you make 200,000 a year, or you make 2 million a year. All these steps, the most wealthiest people in the world have these steps, and the people just starting out like yourself have these steps.
Yes.
So it's really important. And you were asking, how do you get started?
Yes, if you're a beginner in the financial world, most people, like myself,
Right.
on the outside looking in, will wonder, well, where do I start? What are some of the details I need to know if I'm just getting into this type of practice?
Okay.
So for a beginner, my question would be, where do we start, and what knowledge should we obtain as we are getting introduced to this?
Perfect. So that's exactly what the 7 steps are. So the 7 steps of financial success. Step one is term insurance. And we all hear about term insurance. You probably have it here at work, but nobody knows what they have for term insurance. I mean, you ask 9 out of 10 people and they don't know what they have at the office. But more importantly, they don't know that if they ever leave and go to a different job, they lose that insurance because it's not portable. They don't take it with them. So step one is having term insurance you own, because what you want to have is even if are you married?
No.
Now, even if you're not married, what you do is you get a policy now for term insurance because you're young, you're healthy, and term insurance is cheap. So you can get a term insurance for very little money, and then you already have that in place. So later on, you have a family, and you have that term insurance as a safety net. So the first thing you want to have is a safety net if something would happen to you if you're the main breadwinner, which I assume you will be.
Yes.
Yeah. You're very good at what you do. I mean, you're excellent at what you do. I really appreciate what you're doing today. So to answer your question, step one is term insurance, but not all term insurance is created equal. So there's different companies that sell it, and the only ones that we would recommend are when I refer somebody to you, which we were talking before, it's no obligation. Somebody can sit down with you and go over it, and it may not be something you can do right now, but you have a financial resource later that can help you. So step one you want to learn about what's available for out there, it's term insurance. That's your first thing. So when you get term insurance, you have a very low holding cost. You pay just a little bit every month to keep that term insurance. But what that allows you to do is to start building money in step two, because you can take that term insurance, if you get it from a qualified mutual type company, and you can convert that to cash value life insurance. So cash value life insurance is permanent insurance. When you start it now in your 20s, by the time you're in your 60s, you'll have a heck of a lot of money.
Wow.
I mean, it builds compounding interest over years. You have guaranteed money that is going to grow. But in addition to that, the companies we use are mutual companies, and they pay you additional dividends. So it may be kind of boring at first. You won't see a lot of money being built up, but in 10, 15, 20, 30 years, you have a lot of money that you can use for retirement, and you can pull that money out tax-free. So as a first-time investor, what you want to do is get term life, and then that's step one. Step two, convert some of that to cash value life insurance to build up money for retirement. And then step three is start saving up money so you can look at doing an income annuity, so you have guaranteed lifetime income coming in. So that's really the first 3 steps, and then after that you get with, and you'll be building up enough money, and you have that safety net, you can move to step 4, which would be the stock market. So we're going to take this all the way through real quick. So after you have a stock market, then you can start, at the same time, maybe you can do some real estate. So those are more risky, the stock market and real estate, but you're going to have higher returns because you have greater risk. But if you have term insurance, cash value life insurance and an income annuity, you can afford to be more risky because you have that safety net. You have that safe money. And then when you get to be in your late 30s, 40s, 50s, then you can start leveraging your money because you may have a family, wife, and all that, and you don't want, if you had a long-term care event, you wouldn't want all that money to go just to take care of you and your family wouldn't have anything. So what you want to do is step 6, you have long-term care policy to protect your assets, and then step 7, enjoy life. But you have to start when you're early, when you're young, because time can be your friend, it can be your enemy.
Sure.
So let's just think about right now what you want to do is get term insurance outside of the workplace, and then you can start after that going step 2, step 3, step 4.
Nice.
Is that pretty clear?
Because I think a lot of young adults, this is not the typical conversations,
right?
Especially when you're going through college phase and out of college,
right?
This is not the normal conversation you normally have every single day.
Yeah, so, no. People, it's not a sexy conversation. It's not something you're going to have, after work at having a beer with somebody. Exactly. But it's critical, and it just takes a little amount of money to save every month to really pay off. For as young as you are, you start saving a little now. You're going to have a nice nest egg when you're retired, and you're gonna thank it. You thank the James Duerr Show, actually.
Definitely.
Yeah.
Definitely. I'd like to see what's going to be in store for the future.
Good. Well, thanks for coming out. I mean, you have a lot of courage just to say, hey, let's talk about this on the air, and I really appreciate that because it gives inspiration for other people out there that haven't started. And I'm not talking about just people in their 20s. I'm talking about people in their 40s or 50s that haven't started yet. And it's not too late to get term insurance when you're 40 or 50. I got it in my mid-50s. I got another $1 million of term life because I needed it because I wanted my family to be taken care of. And I thought I didn't have enough at the time. So it's never too late. It's never too early to start.
That's good stuff.
Okay. Well,
appreciate
thanks.
the time and information.
Okay. Appreciate it.